Today I'm going to briefly first talk about the my third email. So you should see it in your computer too. So this is the third email. So I want to talk about this one, our model, a little bit. This is our model. So for example, so we time t minus one, let's say this is today, and t is the next month. So today, so this is 1 month. We are here and we are thinking about investing into stock market, and we want to forecast what is going to happen if you buy stock market index today, and if you hold that for 1 month. We want to know whether you can make money or not. So you want to predict the future market returns, right? So you want to buy at t minus one and you want to sell at time t. So we're going to use so-called holding period return, right? So you have to compute two returns. First of all, stock returns. So you buy stock market index, you buy an ETF on stock market index at T minus one today. And after 1 month, you're gonna sell that in the stock market. So you can compute holding period return for stock market. And you're gonna compute the holding period returns for risk-free bond, 1 month risk-free bond, right? So we are going to compute bond market holding period return for 1 month, and we're going to subtract bond returns, 1 month risk-free returns from stock market returns. That is so-called excess returns. So we're going to try to forecast these excess returns. So now, if you don't have to know everything today, so I'm going to send you the slide and YouTube video clip in the first lecture slide and the video clip. We'll talk about precisely what is the meaning of holding period returns, how do you compute it, that sort of thing. So here I'm going to just give you an overview. So we're trying to forecast this 1 month excess returns. Now, when we do that, we're gonna use all the predictors available at time t minus one, right? So that's the xt minus one. Actually, this is the group of predictors. There are so many possible predictors. So we're gonna use xt minus one, this group of predictors, to predict 1 month holding period returns, excess returns, right? Is there any questions? So we're trying to do that. That's our regression model, right? Very simple model. We're gonna forecast the future excess return using today's informations. Now, based on that forecast, based on the mean forecast and also variance forecast, we're going to talk about this one later. Based on these two forecasts, we're going to determine how much of your wealth should be in the stock market and how much of your wealth should be in the bond market. So we're going to talk about this kind of asset allocation issue later on. Okay. So anyway, what you need to do is the first estimate this model. In order to do that, you need to learn many econometrics tools. So I'm going to provide you lecture slide, video clip, and also code to implement those techniques. So you will learn many econometrics techniques, right? That's this one, number one. And then you need to construct the data for YT and XT minus one for your country. So I'm going to provide various informations about, for example, how to construct YT and XT minus one for your country. I'm going to give you, for example, data stream, so-called the ticker for data stream. So you can use that ticker to find market index and risk-free rate for your country, right? And also I will give you what is the potential list of the predictors you can find for your country. That's the main topic of today's meeting. So you are supposed to find the data to construct YT and XT minus one for your country. And then since you learned the many techniques and since you have the code, you can modify that code with your data. So you're gonna use the MATLAB code I'm going to give you. You just need to modify the data sections and other thing a little bit. Now, sometimes it's not easy to modify the code and you will encounter many errors. If you have that, then you can ask me question and I will help you to correct the error, right? Now you are supposed to do this one by the end, by the sometimes around July 25. You need to do this three step by July 25th. Why? Then based on this result, why? You need to spend at least 1 month to write your dissertations. So the deadline is the September 1st, I think. So once you finish everything, every econometric analysis by this date, you will have 25 to 28 days to write your dissertations. Once you write your dissertations, you can send me a draft, then I will read it and I will provide some comment for that to improve your mark. And you could have many questions now. How can I write the dissertation? What should be the good structure? Blah blah blah. I will provide all those informations later on. So don't worry about that, all the details now. I'm just giving you overview. If you understand this overview, that's fine today. Okay? You learn one by one, and during the whole process, everything will become more clear to you. Okay? So do you have any question for this, my third email? You can just use chatting window to ask me question, or you can just directly speak to me. All right, so if you don't have any questions, let's talk about the main topic I want to talk about today, the fourth email. So I want to make sure this one, please install MATLAB, right? If you haven't done so. And how do you do that? So you need to check my second official email. There I explain how to download MATLAB using your student ID and how to install it. And there's a very excellent basic course about MATLAB. You will learn what is command window, what is the so workspace, whatever. So you can learn very simple things by taking that class, like a 1 hour, 30 minute, something like that. Just take that course, then you will learn all the basics you need to learn MATLAB. Actually, uh, well, it's better to take that course if you're not sure how to use MATLAB. But anyway, so later on, I will help you to correct all the errors. So once you get the data, once you learn the methodology and code, you will try to modify that, just data sections. And if you have any issues, I will help you. So maybe you don't have to learn all those kind of things, but still, it's better to learn this basic how to use MATLAB at this point. If you that will be better. It's not mandatory, but that would be recommended. Anyway, so this is repetitions. In your dissertations, you're gonna estimate this model, excess return, predictors. Now, you need to construct YT and XT minus 1. By the way, I'm going to send you the lecture slide, a link to video clips next Monday. So from next Monday, you're gonna start to learn this new technology. About forecasting, how to do forecasting, what is the forecasting, what is the Diebold Mariano test or Clark and McCracken test, whatever. So there you will learn many techniques from next Monday. Today, this is about the overview, and this is about constructing XT minus one, the predictors for your countries. So I'm going to provide these informations. This is important. So how do you find a good potential predictors for your country? The good XT minus one. You can find 5 or 6 recent papers on forecasting stock market index return in your country. So just ask that to ChatGPT. I tried that and I found ChatGPT provide you very a recent list of the predictability papers. Once you get the 5 or 6 papers, you don't have to read all the data, all the paper. You don't have to read the papers. You can just read the data section of those papers. So here our proposal is to find a potential predictors for your country, a list of the potential predictors for your country. So read the data sections. Maybe those papers will provide you a good potential predictor. Okay. And they may also tell you the data source for those predictors, where you can get those data, right? So try to find a few variable by looking at these recent papers on return predictability. And once you find the names, then you have to try to collecting it. How do you collecting it? That's the next subject I'm going to talk about after talking about this one. That's my fifth email. So anyway, let's continue. So here the purpose is you can get the potential predictors by looking at the data sections of return predictability papers for your country. Just try to find it, check the data section, check the which variable could be good predictors. So if you have any questions, you can ask me. Now, I have some reference to help you to find good predictors. So these papers are the part of these papers are the attached or were attached in my email, right? So first of all, this Goyal Welch paper. So this paper is estimating these equations for US data, so US market access returns and US predictors. So they find something like 14 US predictors for US market access return. Now, maybe, so let's say the short-term interest rate is a good predictor for US market access return. Perhaps short-term interest rate for your country could be also a good predictors, right? So if you read this paper, part of the paper I sent you, you will find the definitions of 14 variable or 15 variable. You could try finding equivalent predictors for your country, right? So this is kind of good reference when you try to find the good predictors for your countries. So try to find equivalent predictors for your country. Now, you have to be careful. For US, you can find many data source and you can construct many predictors, but perhaps for your country, you may not be able to find all those predictors. So US is a heaven for all the researchers. You can find as many the data as possible there, but for other countries, maybe data availability is limited. Okay, so do not be ambitious, but try to just find the equivalent predictors. But when you don't find such things in your country, then just ignore it. Okay, and then the second one. Now the first one, this predictor. These are usually the macro variable or financial market variable. Now, this paper says when we predict the future market access returns, sometimes we can use so-called technical indicator. So this is not macro variable. This is not like a short-term interest rate, bond market yield. There's no economic meaning for these variable sometimes. What is a technical indicator? I sent you this one with that email. So if you read this tech indicator paper I sent you, you will find three different groups of technical indicators. So the first group is the so-called moving average. This is something like you compute average of the so 1 month, 2 months, 1 month, 2 months, 3 months, 4 months. So you compute average of 3 months. That's the first moving average. And then you compute average of 3 months doing, by adding one, by deleting one. So you add new data. So the first average is coming from these three. Second moving average is coming from this. Third moving average is coming from this. So you see what I mean, right? So moving average is that you compute average by moving data one by one. That so you compute moving average and you compute the two different moving average. So the short-term moving average, like a 1 month average or 2 months, it's better to say the 2 months average moving average or 3 months moving average. And you compare that with the long-term average, like a 9 months average. So you compare these two to think about whether you want to buy stock market index or not. Normally, we follow trend. What do you mean by what is the meaning of that? The trend follower means so if when the stock market is going up, if you're a trend follower, you think market will go up in the future. So if the market go up in the past, you think the trend will continue. The rising trend will continue. If market goes down in the last period, market will go down in the next period. This is trend follower, right? So this group of indicator are mostly trend following indicators. So you will be able to read this document and the paper, and it's not that difficult to understand this one. So just something like this. If short-term average is bigger than long-term average, that means today's market is hot. Today's stock market is rising. Today's price is much bigger than the old price. Then, if you're a trend follower, since today the market is rising, you think that in the future market is rising too, right? The momentum is also similar indicator. So in this document, I produce these comparisons. When moving average and momentum indicator produce different things. Momentum indicator is also trend follower, but they are capturing slightly different things. So this is second group, first group, second group, and third group is the volume-based trend followers. So here, rising price is not enough. We also measure how many traders are in the market. How many traders are in the market are they are trading, right? If many people are trying to buy, then that could means more strong buying signal. Okay, market is rising, but many people are participating. That means market is really hot, right? So we could have this kind of technical indicator. We don't have any rational explanation for this kind of thing. It's more like a psychological thing, right? So this RAPEX technical indicator paper says if you use these three different group of trend indicators, trend followers, capturing slightly different things. If you use that as a predictors, you could forecast the future excess return. Now, this is also US paper, but you may be able to find the equivalent technical indicator for your country, right? So how do we compute this one? I will send you a code and explanation and video clip explaining how to compute this thing, right? So if you want to use this technical indicator for your country, you will learn that later on. Then you can use that by modifying the code I'm going to give. Okay? So the macro and financial variable and technical indicator. Now the third one is the so-called role of US. This means in this paper, this is also RAPEX paper. I'm going to use his lecture slide to talk about many technique anyway. So this guy says US market, what's happening in the US market may predict what's going to happen in other market. So if US rising today, maybe next month, other countries are also rising, something like that. So this guy claim maybe US variable can help you to predict what's going to happen in your market. So you may be able to use US predictors for your country's excess return forecasting. Now, how do we construct US predictors? Well, this one is easy. Why? Because US predictors are available at the Goyal's website. So if you click this link, uh, how can I change this? So if you go to Amit Goyal's webpage, so we have two different paper. One is this one, a comprehensive 2022 look. So this is updated versions. And there's one more paper, the comprehensive look at the empirical performance. So this one. This is, by the way, Goyal and Welch paper. Welch and Goyal or Goyal and Welch. So you can get updated US predictors up to 2024, I think December. So if you download this one, and if you want to use US predictors for forecasting your country's excess returns, you can use this data. Now, you have to transform this data a little bit to use. So I'm going to give you method code to transform this raw data into the right US predictors later on. You don't have to worry about that. Now that's the Goyal and Welch original paper, and you get the updated US predictors. Another one is this one, the comprehensive 2022 look at the empirical performance. So here they updated the list of predictors for US. So here they propose like a 50 something US predictors, and they provide all the data up to 2024, I think December. So I told you before, this is not the one, sorry. You can check the Goyal and Welch. That's the 2008 paper, the first one I was talking about. So two different Goyal and Welch paper. You can take a look at the 14 predictors used by Goyal and Welch, and you may try to find the equivalent predictors for your country, right? I told you that already. You can do the same thing for the second paper, this one. So two papers are available in his website, and data set for this one and data set for this ones are also available. And you can check this paper too, the list of the US predictors, and you may be able to find the equivalent predictors for your country, right? So you can also check with these two paper, or based on this one, you can use these US predictors directly for forecasting your country's excess return. Is this clear? So try to find equivalent predictors for this one and this one. So for this one and this one, or you just use US predictors. One choice, find equivalent predictors. Second choice, just use US predictors. Third choice, use technical indicator. Another choice, try to find 5 or 6 recent paper and check the data section, right? Now, obviously, you have too many possible predictors, like 30, 40, 50, whatever. So even though we run these regressions, our predictor is like more than 20 for sure. Then this is the so-called big data machine learning issue. Somehow we have to deal with this kind of too many data problem, right? So we'll talk about the so-called PCA approach, so principal component analysis approach, and we'll also talk about so-called forecasting combinations approach. So our econometric method deal with much more than just simple regression. at the end because you have to deal with this too many predictors, too many X variable. Okay? So you will learn many techniques on that. Anyway, now I provide you the two more potentially useful reference on international return predictability and also emerging market return predictability. So you can check this paper to see what kind of variables are used for forecasting those papers, those countries. And also, when you write down your dissertation later on, you have to write literature review. So you have to write the summary of all relevant and important papers for your thesis related to the return predictability. When you do that, maybe this paper could be very important reference. So you can read this one and you can also search for other things by checking the reference in this paper, right? Or the using ChatGPT to find more recent papers. So that's my talk on the fourth email. Now, can you open this Padlet link? Can you try to open this Padlet link? This is only accessible to University of Manchester student. So you may need to uh, log in somehow using Manchester ID, or you have to, I don't know. So please try to open this link and see whether you are able to access it or not. So we're going to use this Padlet link for all kinds of Q&A. So you're supposed to see this Padlet link. So this is the Padlet link for today's meetings. So if you have any questions, you can click and you can ask a question here. You can even put all these figure or equations, whatever, anything. You can attach that here with your questions. So I will provide Padlet links whenever I send you an important email about lecture slide or code, whatever. So if you have questions, you can use that Padlet link to ask me questions. Okay. So do you have any difficulty in accessing uh, this link? Or are you okay with this?
Yeah, it's fine. No issues.
Okay, so just try that. And if you cannot access this website, please let me know later on.
Sorry, I can't access this website.
So what is the error message? You should
Uh,
get some error message there, right?
it shows that it can't find my ID.
Yeah, so you may have to go to Padlet, manchester.padlet.org. I think all students are able to get this or not.
Uh, maybe I need to register it. Register.
Uh,
Uh,
you should have an account with your university email address.
yes, yes.
And
Let me try to sign up. Use my
yeah, you need
uh.
to sign up the Padlet account with your university email.
Okay, okay. I'll try
And
it.
then try to reopen the link, and then link will ask you to provide this password and ID. And if you have
Okay, okay,
university ID, then you should be able to log in, I think. So other
okay.
than Ishan, other people's are fine or
I'm also getting the same error, user not found.
okay, so then you have to sign up an
Yeah, I'm
account.
doing the same thing.
Yeah, so please do the same things. So try doing that maybe after I discuss this one, or try do that now. Where is By the way, up to this point, do you have any questions? So I basically explained what is the econometric model you're gonna use and what is the whole procedures. So you will learn econometric tool using the lecture slide, YouTube video clip, and MATLAB code I'm going to send you from next Monday. I will send you like five different emails. So you will learn many technique there. And you need to study those. And the another job you have to do is find the good predictors by reading this email again, this fourth email, and trying to find a list of potential predictors for your country by looking at the recent papers on your country and Goyal and Welch paper and technical indicator paper, these kind of papers. And then at the end of the June or early July, you will start modifying all the MATLAB code with your data. Okay, so up to the end of June, your main task is to study all the material and try to find a good list of predictors and try to construct those data by using data stream or other things. So I'm going to talk about that little bit from now on. So I will give you 5 more minutes to try signing up with Padlet using using student email address. By the way, if you are not able to do that, then I will maybe I cannot change it. Maybe I think this is in my Padlet account. It says you cannot share this with the something outside the organizations. There's a limitation. I don't know. I may have to check. Anyway, so try to sign up and try to log in first. So Deepanshi, so can I pronounce your name? Is that right? So you don't have any issue, right?
Yeah, I don't have any issue.
What about Xingyi?
Uh,
Same
I'm
issue?
signing up the Padlet right now.
So try also sign up.
Yeah.
Okay, so I'm going to give you 2 more minutes. So if you cannot do that right now, then try that later on. And if you have difficulty even that time, then just let me know. Then I will try to find the different way, or I'll try to somehow relaxing these restrictions and send you the link again. So I will try different things. Uh, by the way, everyone is going to do almost exactly same thing. So you will learn the same technique, right? So you should help each other if you are not sure about something. So if you have any questions, you can use this Padlet link or something else I'm going to provide you later if you have difficulty in setting up this account. So you will ask each other also questions, help each other to get the good marks. So difference is coming from what kind of data you're gonna get. So if you find unique predictors for your country, which other students are not able to find, that could be a plus point. And your dissertation should be well written. Nowadays, it's not that difficult to write a well written dissertation. I guess you can get help from ChatGPT, whatever. So at least you shouldn't have any obvious grammar error in your dissertation, that sort of thing. Anyway, I will give you a good example of MSc dissertation later on, early July, I think. Then you will learn what is the good, organized. You can learn from the best. Very well written thesis later on. Anyway, so okay, so I don't have much time, so let's just continue with this. This is my fifth email I sent this morning. This is about getting the stock market index and risk-free rate data from data stream. So you're supposed to collect stock market index. You're gonna use so-called total return index, total return index data or price index data. So what are these? So this will be explained in my first lecture slide. So don't worry about that now. So you will collect either this one or this one. And you are supposed to collect short-term interest rate, 1 month or 3 months short-term interest rate from data stream. Now, where you can use data stream, so you have to go to Eddie Davis Finance Zone. The computers are there. And when you use the data stream there, how do you find certain datas? You need to know so-called data stream mnemonics, so so-called ticker, so name, the symbol for each asset. You need to know this one for each asset. When you try to find the data from data stream, you need to know special symbol for that asset. Okay. Now, if you click this link or this link, this is very old explanations about how to find the data in the data stream. The example, so this one, they're trying to find the stock market index data for UK and China. This one, they're trying to find the short-term interest rate data for US and UK. Just read this one to see how you can do that. So explain the very excellent and how can I say that? So excellent the explanations. So you will learn how to find the data from data stream roughly by reading these two. By the way, you don't have to worry about do I need to understand everything written in these two? You don't have to do that. I will explain how to find stock market index and risk-free rate step by step in this email. But still, I think you will learn something by reading these two. So I recommend you reading it. Anyway, so what you need to know from here is when you try to find certain data in data stream, from data stream, you need to know special symbol. Okay. Step two, I already search for this special symbol for your country's market index and risk-free rate data. For Hong Kong market, you can use this special symbol or this special symbol. For Japan, this one or this one. UK, three possible choice. China, three possible choice. So which one I need to use? Check the each symbol in data stream and read the data descriptions and choose the one you think best. Now, how do we check the data, the description for this one and this one? I also explained that in the instructions I sent you with this email. If you read that instructions, you will find how to find the data descriptions for each special symbol, mnemonic, right? In data stream. I explained there here. Anyway, I already searched and found this for you, so you can use these mnemonics when you try to find stock market index data for your country. Likewise, you can use these mnemonics for 3 months risk-free rate for your country. Try to collect this data at least by 15 June. And if you have any issue to find these two things, you can ask a question using this Padlet link. So what should we do? I gave these step in a separate file with with the email I sent you, right? These so-called instructions. The name of the file is like this. Instruction related to fifth email. So data construction using mnemonic in data stream. Special symbol for each data. So how do you do that? So once you go to the Eddie Davis Finance Zone, and if you find the computer with data stream for Excel, or this one, now the name has been changed. So you should find the computer with this one, this app, Refinitiv Workspace Excel. So once you click this one, the Excel will open and you should see Workspace here. And I think automatically you will be able to use this so-called Refinitiv Workspace. You don't have to do anything. Just if you use the computer in Eddie Davis Finance Zone, I think you should be, if you find a computer with this one, by clicking this one, you should be able to workspace. So click workspace ribbon, then you will see something like this. So there are many small option ribbon possible that you can use. Then click, there are so-called, I think this is data stream. So click data stream, and then there will be some sub uh, menu, and you have to choose data stream formula. Okay, just follow this one. So go to the AD Davis June and try to find a computer with this one. If you cannot find it, just ask librarian. You want to use this data stream or Refinitiv workspace, which computer you need to use. You just ask librarian and then open this one, click workspace, click data stream, and then click data stream formula, and you should see this one, this black one. And then you have to, so let's use this one as an example. This is the mnemonic for Hong Kong market index. You want to write this one in search series and list. So I think this is here. And click this symbol. I think this is here. If you click this one, you will find many sub-series are associated with this one. So with this mnemonic for stock market index, actually you can get RI, which is total return index. Well, what is the total return index? So when you buy a stock and when you sell the stock, your return is coming from two things. One from buy stock and sell stock, the capital gain plus dividend, right? So when you buy a stock, your return is coming from two things, dividend and capital gain. This total return index is including dividend. So this is a more correct measure of the return, total return index. So always it's better to use total return index when you try to compute market excess return. So anyway, but sometimes you may not be able to find RI for certain market index, then you can use PI. PI means when you compute the return, you don't use the dividend. So this is the return without dividend, price index. Total return index is the return with dividend. So anyway, so if you click this one, you will find something like this. There are many. So these variables are associated with this one mnemonic, Hong Kong market, stock market index, and choose RI, click RI, click PI, click DY. This is dividend yield. So what is the dividend yield? Read Goyal and Welch paper. You will find the definition of dividend yield. And this is very good predictors for US market. And this could be also good predictors for your country. So you're gonna also collect this data, dividend yield. And also you can find PE, this is price earning ratio. Many people claim this is also good predictors. And you may be able to find BP, this is so-called book to market ratio. Many people also claim this is a good potential predictor. So click PI, RI, DY, PE, BP. And then if you click use, somewhere here, use, then you see the black. What's going on? Sometimes I have this issue. I don't know why. So you still see black screen like this, but now you have Hong Kong money here, and you have five different choice you just made: PIRI, price earning ratio, book to market ratio, and dividend yield. Gonna be appear here. And then you need to choose your frequency. You're gonna use monthly frequency. You can use sometime daily or weekly, but for predicting market excess return, monthly is a kind of good choice. So just use monthly. And you need to choose time period. So you want to collect time series data of these five different cities associated with Hong Kong stock market. If you just follow this example, that's what you're gonna do. Now you need to choose the starting date here. Now I'm going to use this one, the end of January 1990. Now different country, different period of data. So if you, for example, use China, maybe this data will start from 2000, something like that. If you use UK, maybe your data could start from 1990. Japan also 1990. So anyway, so you need to choose your starting date. Uh, when you choose the starting date, you have to remember this one. You need at least 20 years of monthly data. So we're gonna do many econometric analysis. In order to do reliable econometric analysis, you need at least 20 years of data. So it means at least your data should start from 2000, something like that. Okay? Monthly data. Now, you have to choose end of month data here. So if you want to use January, you should use 31st. If you want to start from February, you should be 28 or 29, right? Why? When you estimate regression like this, we put same t minus 1. This is a group of predictors. All of your predictors should be consistent in terms of date. So if you use end of date month data for one predictors, you have to use end of month data for all the data. When you compute excess return, you also need to use end of month data, right? So when I said this one, you're gonna forecast future excess return using T minus one informations. When we use monthly data, you have to choose specific day of months for every data set, and that specific date should be consistent. Now, usually we choose the end of months as our data point. Okay, so you use monthly data. You, I'm going to recommend it using this one. Just use the end of months data for all the data. Okay, so you have to put last day of that month here. And then if you click insert, and then in your Excel file, you will see this time series of data. Okay, then you can just save this one and you can use it as your data. I already give you fifth email, I give you this mnemonic, right? So try to find the time series data for all of this. It's not that difficult, right? Just follow what I just told you, the step what I just told you. Now, how do I know the data description? What is this one? What this symbol means? How to find more details on the mnemonics you use? Something like this. In your this Excel screen here, just click data stream again, and then click utility. And so if you click data stream, you will have submenu. If you click utility, there will be also another submenu, and there will be so-called this one, find series. So if you click that one, you will see this screen. And then you write this one in here and click search. Then you will get these descriptions, time series graph, and the explanations. And I think if you click here more, you will find more details about all those cities associated with this one. We chose 5 different cities, right? For this guy, you will find more details about those here. So you can do the same thing for all the mnemonics you have, and you will find all the details about those mnemonics, right? And you're gonna choose one market index and one risk-free rate suitable for your investigations. So here it says more. If you click more, then you will get this information. So this is more. I'm sorry, this is more. And the headline coverage says the PI price index is available from July 1964. Dividend yield price earning ratios available from May 1973. RI total return index is available from January 1990. This is, I think, volume. Well, I don't know what is NR, but you can find more informations by clicking this one. So try to do this and try to find a good proxy for your market index and risk-free rate. Once you choose one, then you will follow this step to find the time series for your country's data, right? And what about you want to find other series you wish to use as a predictors? So for example, from the list of the potential predictors, you found out in this example, bond yield, something like term spread, the long-term bond interest rate minus short-term bond interest rate, or long-term bond yield minus short-term bond yield. We call that as a term spread. Many people claim term spread is a good predictor for future market index return. Let's say you want to find out bond yield data in data stream. How can you do that? You can ask, what is the data stream code for Hong Kong government bond yield or data stream mnemonic for Hong Kong government bond yield? You can ask that to ChatGPT. Actually, I asked that to ChatGPT, and ChatGPT says this data stream mnemonic for assessing Hong Kong government bond yield is not listed, but they suggest using this mnemonic. Here, XX is the country's ISO code, country's special code. So if you change XX with here HK, so HK is the special code for Hong Kong, then that could be the mnemonic for Hong Kong bond yield. So that's what ChatGPT says. So I click data stream formula just I did before, right? LTR HK BMK in search window. And then you see you see something like this and just click yes, then you will get all the data. But when you do that, you have to also uh, change the frequency. Frequency, we are going to use monthly data, and you have to choose the starting date. I just use the same starting date, the same end of month data, and click insert. Then you will see this data series. Now, you start from January 1990. Obviously, for certain maturity, so starting date is here, but for the longer horizon maturity, like a 30-year uh, government bond for Hong Kong, it may start from 2000, something like that. You have so-called unbalanced data series. Certain series start from earlier, certain series start later. We have unbalanced time series data. When you have these kind of situations, just use the common period. So, or I should say you use balanced data series. Okay? Just use the balanced data series. You have to think too many things if you want to use unbalanced data series. So for your dissertations, we're gonna use just balanced data point. Now, so I told you you have to use balanced data point. I told you you need at least 20 years of data point, and you have to use monthly data, and you have to use end of month data, right? Given these conditions, you need to choose your own starting date, right? If this is, so you just check this four, check this is right, this is right, this is right, this is right, then you can use that date as your starting date, okay? You don't have to use all the data here. You can just select a few bond yield and use that as a predictors. Few term spread and use that as a predictors. Now for other countries, I ask the same thing to ChatGPT. And for Japan, you just have to change XX with JP. For UK, we have to change XX with UK. Now for China, unfortunately, we cannot find this one here. By the way, this one gives you a list of yield, not just one yield, the yield for various maturity. So we call this as the list of mnemonics. So this is actually list of mnemonics. I couldn't find a list of mnemonics for China. Instead, I was able to find mnemonic for each maturity. So this is 1 month, 3 months. So you can see only change is coming from here. 1 month maturity bond, 3 months maturity bond, 6 months, 9 months, 1 year, 2 year, 3 year. Y means year, M means month, right? 4 year, 5 year, 6 year. So you can use this group of bond yields to get the China data. Now, what if data stream cannot provide you the data you are looking for? Then check this website. So if you click this one, you will see this University of Manchester list of data available for research, something like that. Mostly you want to check Bloomberg. This is also available in one of the computer is Eddie Davis Finance Zone. So Bloomberg or sometimes OECD data. So if you want to get some macroeconomic data, if you cannot find it in data stream, you may want to check from OECD or IMF or World Bank. Sometimes Fred, this is the Federal Reserve as St. Louis, US. This guy also has a many data set, so you want to check this. So first check data stream. If you don't find data in data stream, then use Bloomberg. And if you cannot find there too, either, then If you are looking for economic data, then check OECD, Fed, IMF, World Bank. Finally, if you cannot find the data you are looking for from all of these sources, then you need to check your chosen country's government website or central bank website for the data. Okay? So usually this is the packing order. So when I try to find the data, I start with the data stream and then Bloomberg and then this source. Okay? Any questions? So in this, if you follow these instructions, you know how to find the data in data stream, right? How to find the data descriptions in data stream and how to find mnemonic in data stream. You can ask that to ChatGPT, right? So I explained how to find the data, how to find the mnemonic, how to find the data descriptions, everything with this email. Any questions? I guess the remaining issue is try to sign up with Peddler link and whether you are able to ask any questions or not, right? Uh, so try signing up and try to access this Peddler link. And if you are not able to do that, then let me know later, okay? Try that today or tomorrow. By the way, you are supposed to submit ethical form, right? So did you get the email about ethic form? I think every MSc the student should have received this email from the school. But anyway, I'm going to send you an email, I think this Sunday about this ethical issue. Basically, there's no ethical issue, but still you have to submit the form to the school. So I will send you an email with all the instructions about how to submit form, what to look for, whatever, those kind of things this Sunday, okay? So I'm going to send an email this Sunday. And from next Monday, I'm going to send you the lecture slide, video clips, and MATLAB code. You need to study those, and you could have many questions to ask at the time. So in summary, today's course, I explained what is the overall model, what is the whole procedures, how to find a list of good predictors, and how once you determine a potential predictors, how do you find those predictors in data stream, right? I explained those kind of things today. Just just read what I have been talking about again and again, and if you have any questions, try to use Peddler link, or if you are not able to do that, just let me know by tomorrow, okay? Then I will try to find a different way or better way, etc.